This is Andrew Stotts from A. Stotts Investment Research to talk about world-class benchmarking. And in this case, I'm going to highlight a company called China High-Speed Transmission Group Company Limited. And let's go into some of the details about this company. First, I look at companies in this framework, and I'm going to start with the upper right-hand corner and specifically the background of this company. Now, this company has top market share in transmission gears used in wind power that are manufactured in China. Gears for wind power equipment account for 80% of revenue, and the group supplies all the major global wind power equipment makers, both in China and overseas. GE is its biggest customer. If we look at the price performance and the general information, we can see the market capitalization is about 1.3 billion with average daily turnover about 500 million and a beta of about close to 1. It's in the industrial sector and it has a free float of 63%. Now, in the upper left-hand corner, I'm going to tell you a little bit about what this company does. CHST is the biggest manufacturer in China of transmission gears for wind power equipment and has around half of the domestic market. It also has a quarter of the market overseas for this product, which is crazy amazing, the main customer in the US being GE. Wind power transmission gears account for more than 3/4 of the company's total revenue. The remaining divisions are industrial gears, which are mainly for use in construction, marine gears, which are integrated marine propulsion systems, including hydraulics and others. The transmission gears come in various sizes for different wind power capacity, ranging from the smallest at 750 kilowatts to the largest of 5 megawatts. But the main product, at just under half of the division, is the 1.5 megawatt gearbox. Despite overcapacity in the power market because of slowing Chinese economy and the curbs in certain provinces, the Chinese administration still plans for 31 gigawatts of projects to be constructed in 2016. Massive. Now, if we look down at the revenue breakdown, let's try to understand it a little bit more. We can see that wind power transmission gears account for about 80%. It's just a gearbox. Whoa. Industrial gears, 14%, and marine gears at 6%. So now that we understand the company, I want to go into our world-class benchmarking product, which talks about profitable growth and why am I looking at this company. The first thing we highlight is that profitable growth we look at over a 5-year period, 2011, 12, 13, 14, and the past 12 months. What we can see here is there's been a significant improvement from number 9 to number 3. So profitable growth is very strong, and that's compared against 1,430 large industrial companies worldwide. Now, the next thing we want to understand is, where does this come from? Well, profitable growth is a combination of profitability and growth, and we can see profitability was ranked 5, and it came up from 9, so a significant improvement, and growth massively increased to 1 from 9. So a big change happening at the company. Now, how do we understand these two changes? Well, the first thing we can see is that it's all about net profit margin, which jumped from number 7 ranking relative to 1,430 large industrial companies worldwide to number 2. And what we can also see is that this is reflected in margin change. Remember that growth is EPS growth, and it can be really driven by 2 things, sales growth and margin change, and in both cases, they're both number 1. So this company's really made quite a turnaround. So, do you want to see the profitable growth rank for a company in your portfolio? Well, just leave a comment below with the company name and country listing, and I'll post it if I have it.